Will the RBA cut the cash rate in August 2025? In this episode, this is what we're going to be breaking down. We're going to be looking at the unemployment data. We're going to be looking at the inflation data, property prices, and what is being predicted for August. At the time of recording, this is about 5 days out from the RBA announcing what is going to take place. So let's get into it. And obviously last month in July, they threw a massive curveball and did not drop the rates when pretty much the entire marketplace was predicting they would drop the rates. We got it wrong. Hopefully this month we're right, or hopefully we're wrong, as I'm about to discuss a couple of things within this one. There's been a couple of good, important pieces of data that have been released, which is really going to help the RBA make their decision this month. Now, the first one is the unemployment rate. Now, in the month of May, the unemployment was 4.1% and had been 4.1% for a consecutive number of months. However, it has now increased to 4.3%. So it's increased a little bit for June, and that is a sign with that increasing that it's more likely we're going to see a rate reduction. That small percentage equates to a large number of unemployed people within Australia. So the percentage doesn't sound like much, but in terms of individuals who don't have a job, it is quite impactful. Now, the second thing that the RBA made commentary on in their July meeting was they're waiting to see the quarterly data on inflation. They want to be confident that it is moving down. So that's quite a conservative approach, I believe, and what is going to form my prediction on where we see the rate cut take place for the month of August. Now, CPI rose 2.1%. Of that, there was a couple of big movements. Housing was up 1.2%, food and non-alcoholic beverages up 1%, and health 1.5%. This is for the quarterly figures. So once they got that, it solidified that inflation was still tracking on where it needs to be. Now, those 2 points are quite impactful on where we think that the RBA is going to go for this month. We've got inflation in line where it needs to be, and we have unemployment rising. So it does look likely that we're going to get a rate reduction. I think they should have cut in July. However, they didn't. They held on. They waited for that data. And I'll get to what I think is going to happen later on. Now, let's touch on property prices for a moment for the month of July. A lot of people are still thinking that they should wait for the perfect time. Property prices are going to crash, all this bullshit. The reality is that prices are still increasing. And with more rate reductions, there is going to be more sentiment in the marketplace. Borrowing is going to be easier. Cash flow is going to be better. And there's going to be more people taking action. And if you get that right marketplace, there is going to be continued growth. So you might wait 6 months and be on 0.2% lower or 0.5% lower in terms of your rate, but you could be paying $20,000, $30,000, $40,000, $50,000 more for the exact same asset, which means you need to borrow more for the same asset. So yes, your rate might be a little bit lower, but it does not fucking matter because you have to go out and borrow more money and pay that off over 30 years. Now, the change for the month, for Sydney, it increased 0.8%. Melbourne increased 0.4%. We had Adelaide increase 0.7%. Perth increased 0.9%. Brisbane increased 0.7%. Darwin 2.9%. No one fucking cares about Darwin. Canberra up 0.6%, and Hobart corrected 0.1%. So that is what it is for the month. Property prices in almost every capital city increased for the month. All right. Obviously, Darwin right out there at 2.9%. We're going to do Darwin in another episode. It's essentially a hotspot at the moment. Are the real fundamentals there for consistent long-term growth? not a marketplace that we focus on. So that is property prices for the month. If you sit on the fence or if you take longer to take action, you are paying more for the same asset. Yes, you might be on a lower rate if you wait 3 months, but that is such a small piece of the puzzle. The bigger piece, get in, get that capital growth, and before the price growth. Now, the ASX indicator for the month, it's actually not basing it off probability of a 0.25% cut, but a 0.5% cut, a decrease to 3.35%. So we're looking at it from 0.5%, not 0.25. And as at the 6th of August, which is the most recent data at the time of recording, it is a probability of 51% for a decrease of 0.5%. So halfway for 0.5%. Now, with it predicting 0.5%, we expect it's going to go down by 0.25%. I think RBA should have probably cut last month and then see another cut, making it 2 cuts for the year. Now, they haven't done that, but I don't think that they're going to go out there and do 0.5% cut. And that's just based on them being conservative and I guess what they have put out in their media statement last month, just having a very conservative outlook. And we know the RBA is pretty late in either increasing rates when they need to increase rates and lower rates when they need to lower rates. I think we'll see a 0.25% cut this month, and then potentially the next meeting or meeting after, we'll see another 0.25%. Also, don't listen to me whatsoever. I don't have a crystal ball. I'm not an economist whatsoever. But that's where I expect to see it take place. I hope I am wrong, and I hope we see a 0.5% cut. But just I personally don't think that that will happen just based on those statements from the RBA. But there are some signs that are really looking for that rate reduction to happen. That's the episode for today. Just a little bit of data on a couple of different things that are really taking place at the moment. I hope you have seen value in this, and we'll see you on the next episode. Thanks for listening. Goodbye.